30 days of the date of failure.
Hmm.
That is when the first is they'll give DIR 8.
Director will give
DIR 8.
DIR 8.
Okay.
Director will give DIR 8 to the company. Company will in return give it to the ROC in DIR 9.
Okay, that he has disqualified within 30 days. Okay.
Correct.
But here they are not appointing, right? It's just a formality that he's still there to clean out his mess. That is, whatever he has done.
Oh, no, I didn't get you.
That here DIR 8 and 9 is not of any appointment. He's staying in the company to clear all his default any.
In other companies, he needs to vacate, right?
Yeah, in the company which he has not done, which he has done mistakes.
Other than the companies.
Okay.
For the companies in which he has defaulted, he will continue to stay. For other companies, he stands to vacate.
Okay, sir. Understood.
So initially, form DIR at the time of appointment itself, this form is given stating that the director concerned is not disqualified from appointment. If it's disqualified, then he has to disclose, right, initially. So appointment cannot happen in that case. So that is why the company take a declaration in DIR.
Okay, sir.
Any doubts from the previous class?
Sir, means that I was not knowing that the last Friday the company law class was there, means I was not knowing actually.
Yeah, you can just speak to any of your friends, they will help you
out. Okay, sir. Okay.
Right. I think SBO one was pending, right? Maybe I'll take it up tomorrow. We'll start off with new chapter today. Right, I'll remember and I'll lesson number 8.
What's it?
Lesson 8. Accounts, audit, and auditors.
Yeah. Accounts, audit, and auditors.
Okay.
From an exams perspective, this is damn important. You will get bare minimum of 8 marks. So if you are lucky, 3 marks questions or 4 each you will get, or 5 marks, 2 questions. We'll start. Any doubts from last class? We'll start, right? 16 of them are there.
Yes, sir.
14.
Yes, sir. Start.
Can you guys think of a reason why books of accounts needs to be maintained?
To keep a proper track of the expenses of a company, where the money is coming, where the money is going out of a company.
To show the transparency of the company.
To show the
Transparency of the company, that they how it's the operations are carrying on, like that.
Correct then.
Mandatory requirement also in the Companies Act.
Okay, there is a mandatory requirement also, yes. Any other reason can you think of why company needs to maintain books of accounts?
Where the significant amount of portion of money the company is making investment to how the things are carried out. Like because the company, as in the whole period of the company's existence, the company will be doing borrowings and kind of putting money and that, so that the track is like the money is not getting misused in the company. Otherwise, people have takes money, or the company may give kind of sharing of amounts, like so lot of reasons are there where the finance is important, because if the books are mismatched and all, the company might be into trouble, like correct way of earning versus expenditure.
Correct. Right. So everyone have told you stated little points, which is absolutely right. Look, from a shareholder's perspective, he has invested the money, right? He wants to know what is going on in the company, as he is not involved in the day-to-day affairs.
Yes.
Who carries out the day-to-day affairs?
The board.
Board of directors, right?
Yes.
Yes.
So, mayor and the trust, the shareholders are letting the board of directors run the company, right? So, on that trust, it just does not work on the trust. Yes, trust is a key factor, but to show that trust, you need a proper recording of the books of accounts.
Yes.
Right. So, if you don't maintain, what happens? You are violating the law. One.
And shareholders will not trust the
Breaching
company.
of trust.
Correct. Breach of trust, and it may lead to fraud and
bankruptcy.
Right. So your value of shareholders gets eroded in the process. Right. So that is why it's very important from a company's point of view that it maintains books of accounts in true and fair manner.
Correct.
Got it right? You understood?
Yes.
Okay, come to page number 310. See, books and paper. Look at the definition: books and paper. Book and paper or book and paper. Right? It includes. It is an inclusive definition. So, which means tomorrow government can say this is also may form a part of your under books or paper. Right? That is your deeds, vouchers, writings, documents, minutes, registers maintained on paper or electronic form. So under books and paper, important element is books of accounts. See what forms part of books of accounts. Right, your sale, purchases, your assets, liabilities. So all the recordings forms a part of this books of accounts. Right? Financial statements. Please remember these 5 points. Wherever we are referring to financial statements, you need to understand we are referring to all the 5 points. That is your balance sheet, profit and loss account, cash flow, statement of changes in equity if applicable. Small companies and OPCs are exempt from statement of equity. Explanatory note forming part of your balance sheet, P&L, cash flow, statement of equity.
Statement of equity is like Manoj, where the company brings when the fresh capital is induced and the change of
Correct.
dilution
Correct.
amount that happens. That is right.
Yes, yes. Right. Financial year we have discussed, right? Definition of financial year. Can you recollect and tell me without going through this book? Financial year.
1st of April to 31st
Correct.
of March.
Correct. And what if you tell me in the state of incorporation?
If it's incorporated with between January to March, 1st January to 31st March, the company can close its book in the next closing year. So 1 year.
Right, right. So sometimes what happens is, in order to align financial statements, financial year, okay, you can also align. Suppose, for example, your holding company is in Singapore, right? Take an example, and Singapore is following a financial year from January to December, right? Wherein in India, you are following from April to March. Now you can make an application to central government to change the financial year to match with your holding company. That is also possible. Change in financial year, so that the consolidation can happen smoothly. Consolidation of financials, which I'll talk about in the future thing. You're able to understand, right?
Yeah.
So tomorrow you will get a question, what is the process of change in financial year? Right? You need to make an application to central government, that is MCI Delhi. Earlier provision was that you need to approach NCLT tribunal, but now the process is smoother. You don't have to approach tribunal. You just have to apply before MCI Delhi. You're able to understand?
Yeah.
You can just read out, Siddharth.
Financial year, according to Section 2, subsection 41 of the Act, financial year in relation to any company or body corporate means the period ending on 31st day of March every year, and where it has been incorporated on or after the first day of January of a year, the period ending on 31st day of March for the following year, in respect whereof financial statement of the company or body corporate is made up.
Understood, clear?
Yes.
Fine, right? Yeah, next.
An application may be made by a company or body corporate which is a holding company or a subsidiary or associate company of a company incorporated outside India and is required to follow a different financial year for consolidation of its account outside India. The central government may, if it is satisfied, allow any period as its financial year, whether or not that period is a year. Any application pending before the tribunal as on the date of commencement of the Companies Amendment Act 2019 shall be disposed of by the tribunal in accordance with the provisions applicable to it before such commencement. Provided
so Companies Amendment Act 2019, so that is when the changes were made. Whatever pending applications that were made and pending disposed of the tribunal, that will be disposed as per the provisions. Okay, these are very basics to start off with. Please remember, books and paper, very important. That includes all your register minutes and all those things.
Yes.
Books of accounts, 4 points.
Money
Right.
received, money.
Financial statements, 5 points. Financial year. Financial year, mark it as star. You will get a 4 marks question if you are lucky. They will ask you, company incorporated in Dubai has set up a place in India for its business. It wants to change its financial year, whether it is possible or not. You're able to understand, right? You need to write the entire thing for 4 marks. Change of financial year.
It is all the 3 paragraphs.
Yes, yes. All the 3 you need to write.
Yes.
Sir, in that last point, the 2 years, what they've told.
Yeah, proviso also you can write.
No, what is
But
it like? Is it they're telling that after 2 years of following their holding company financial year, they have to follow Indian financial year? Is it?
No, this is at the time of commencement of this act. That is, you can just ignore this point.
Okay. Sir.
So this point, as when Companies Act was made, 2014. Right. So now this books of accounts needs to be maintained at our registered office.
Correct.
Registered office of the company, books of accounts. Please remember. Right. You want to maintain it elsewhere in India, you need to intimate ROC in form AOC 5. Okay. Please note down. Books of accounts will always be maintained at registered office of the company. And whenever inspection takes place, directors needs to allow inspection to the authorities. During which hours?
Business hours.
Business hours.
9 a.m. to 6 p.m. business hours.
Correct.
Other than national holidays.
Right. So suppose an income tax officer comes and he asks for books of accounts. Directors needs to cooperate and give the books of accounts to them. Right.
Yes.
Suppose they don't cooperate, they will become disqualified. Please note down. So that is why this is very important. So first point is books of accounts needs to be maintained at registered office. With the permission of the board of directors, it can be maintained anywhere in India, provided you submit a form with ROC within 7 days. Within 7 days from the date of maintenance.
Right, the last point what you said, like, see, the first thing is the books of accounts will always be maintained in the registered office of the company. In case the company wants to maintain it elsewhere, they have to submit
India.
an AOC 5 form to ROC to get the approval. Whenever they
No, it's just an intimation form, intimation
yeah,
only, not
it's just
approval.
an information to that they're maintaining the books at some other office, and whenever there's an inspection, they have to support the authorities to get the records inspect, and the inspection can only be taken off in the business hours.
Correct. Correct. If the directors and officers do not cooperate for inspection,
They stand
they will be disqualified.
disqualified.
Right. This stands to be disqualified.
Come to page number 311. Okay. Section 128 of the Companies Act specifies.
Okay.
Right. So preparation and keeping of registered office other relevant books for every financial year. So financial year to financial year, you need to maintain books of accounts. Right. It should be depicting true and fair view. Very, very important, because this is where the origin of audit starts. Right. The law says true and fair view. as per the system is such that the government do not believe the directors what they are saying, whether it is true or giving the fair view. That is why audit comes into picture. Who prepares these books of account? It is the management, your accounts team, your finance team. Directors are not anyway involved into it. Please remember, except your managing director or your whole-time directors. Management prepares books of accounts. Directors are only presented a gist of it in the presentation meeting, that's all. You're able to understand, right? Books of accounts. Yeah. Your accounts, your finance team prepares the books of accounts with the help of CFO, CEO, your WTD, your managing director, your non-executive director, independent director are nowhere connected in preparation of books of accounts. Please remember, they have no role. In fact, in the recent couple of weeks, an independent director resigned for this purpose. Put a independent director's name while signing. The director resigns stating, I am not involved in preparation of financial statements. Without my knowledge, company has put my signature. Hence, the director resigned. You're able to understand, right?
Yes, sir.
So books of accounts needs to be maintained accrual basis and double entry system. I think in our 12th and PU, we will
yes,
we have studied this. Right, single entry, double entry.
Yeah.
Right. Now, place of keeping, always, as I said, registered. But if the board of directors decide, then it can be kept elsewhere also. Intimation needs to be filed in AOC 5.
Sir, means the form of the AOC 5 means what, sir? AOC 5.
It's a form name.
Form name.
See, basically this form names are given basis your rules. So accounts is there, no? Company accounts rules 2014. So on that basis, if you look at MGT 14, MGT 7, so that is given again on the basis of rules, management and administrator rules. So that is why that is how these form names are given. Now, it can, as discussed, it can be either maintained in physical copy or it can be maintained electronically. Both are possible. But if you are maintaining electronically, you should have access, 24/7 access all the time. And company needs to have a software for this to record. Point number 2, in maintenance of books of accounts in electronic form. It's kind of a NetSuite or a Tally software wherein you make entries of your journal entries, right? In 2023, there is an amendment in this. From first day of April 2023, every company needs to have a accounting software to record your accounting transaction. So any doubts still here?
No, sir.
Okay, in cases where company has branch office, what happens in that case? Branch office. You remember we discussed about the registers kept in foreign countries. Wherever entries are made there, subsequently entries have to be made in India too, right? In the principal register.
Yes.
Similarly, for a branch office also, entries will be made in branch office. In the registered office, a similar entries has to be done. So as per Information Technology Act, there's few requirements of storage, retrieval, display, printouts. And you need to maintain timely backup. Right, so as this books of accounts needs to be maintained for the period of 8 years, that is why backup is important. Like tomorrow you're maintaining electronic form, if there is any virus, you cannot say because of this virus all my books of accounts are lost. Right? You need to have a sufficient backup and that needs to be maintained for 8 years. Preservation of records. So last part, company shall intimate the ROC on annual basis. This is applicable in case company is maintaining your financial statements with ROC. Right? So in that form, all this particular needs to be made. Only in case company is maintaining an electronic form. Otherwise, this point is not applicable. If it is maintaining in physical form, this point is not applicable. Practical is done today. It needs to be entered in the data. I mean, physically.
So you're not audible, and your video is also not clear.
Sorry, your voice is breaking.
Is it better now?
Yes, sir.
Yeah, so which point you want me to repeat again?
After you told that if books of accounts are maintained in e-form, all those 4 requirements are there that needs to be filed to ROC.
Yeah, so that will be made in form AOC4.
AOC4. Okay, sir. So that's name of the service provider and all.
Correct. Okay, got it. 1 minute. So only when company is maintaining records in electronic form, right? So this provision becomes applicable. So there is a form for filing financial statement with ROC, that is AOC4. In that form, you enter these details. Otherwise, it's not applicable. So as I was saying, maintenance of records in electronic form, it's a difficult task for any company because it has to be done on real time, right? If you look at this phone which comes with, when you click a picture, there is a timestamp that comes there, date and time also appears, I think in some Vivo phones or something like that. So accordingly, similar way, you need to have a timestamps for each entry that you make if you are maintaining in electronic form. So that is why a lot of companies prefer to maintain in physical form. Right, suppose you do a transaction today, it needs to be entered in your database. Right, if you don't enter in a database, if you are maintaining electronically, then if you're doing it tomorrow, tomorrow's date will show. Right, whereas for a physical uploading, you can read it today and just upload or just maintain. Right, so but if you are maintaining in that, there are few information technology requirements, that is storage, retrieval, accessible, providing information with respect to that in AOC4 with ROC. You're able to understand, right?
Yes, sir.
Yeah, come to page number 312. Books of accounts.
So AOC4 is where the company submits the accounts details in the electronic format or with recording through electronic format.
AOC4 is a general form which is filed like an MGT14.
Correct.
Similar form, you file it with ROC, wherein you file the financial statements.
Correct.
That form, there is an option to fill up this data if the company is maintaining electronic records. So there is a radio button wherein you need to tick.
Whether you're maintaining it physically or electronically.
Correct.
Yeah.
Correct. If that is applicable, then you need to enter all the 4 details. That is, who is the service provider.
I mean, which
Right.
are the software you are using, who is the provider,
Correct.
who is the maintenance
Correct.
of the database
Correct.
maintenance.
Correct.
Because we maintain servers.
If it is in physical form, in the form you will just tick that it is not applicable.
Yeah.
Okay, 312, page number 312. Books of accounts in respect of branch office. Right, books of accounts, whatever entry you are making, you need to make the entry in registered office also. Right, who can inspect the books of accounts? Please remember, it's only the directors can inspect. Only the board of directors can inspect the books of accounts. Now take an example, I'm a director, I want to inspect the books of accounts, right? I am not in India, take an example. Now I authorize Nagendra to inspect on behalf of me. Nagendra is not a director. I'm just giving a power of attorney to him, saying because I'm not in India, by virtue of this power of attorney, please go and inspect the books of accounts of this company. That is not allowed. Power of attorney is any other authorization giving access to any other persons to the books of accounts, it is not allowed. Only director himself can access the books of accounts. You're able to understand, right?
Yes.
And if the company, if the director wants to inspect the books of accounts of a subsidiary company with a specific board resolution, he can do it. Right? If he wants to inspect his own books of accounts of his company, board resolution is not required. But if he wants to inspect subsidiaries' books, specific board resolution is required. You're able to understand, right? If the company has subsidiaries, if the director wants to inspect books of accounts of the subsidiaries, then in that case, specific board resolution is required saying, Mr. Sidharth hereby wants to inspect the books of accounts. Right? Board of Directors unanimously grants approval. Right? Any doubts still here? Please remember, no POA, power of attorneys, POA, and any sub-delegation won't work in case of inspection of books of accounts.
The inspection of books of accounts for subsidiary company when you're talking about, it's like for my company, because I'm the director, I'm the person on authority, I can without any resolution I can do. But when it comes to subsidiary, let's say if I have a subsidiary, for that my parent company is holding that subsidiary, for that books of account inspection also I need a resolution.
Correct. Only in that case only you need.
So then the parent company's board has to approve unanimously to go and do the subsidiary.
Yes,
because parent company and subsidiary both are
different parties, right? Different legal entities. Different legal entities.
Although the ownership is on the parent company, but because in the legal point of view they are two individual existence, so for that we need the resolution.
Perfect.
But this will be a board resolution where we have to get the 50% majority to get the permission that yes, that can be done.
Correct. You're able to understand, right? Okay, in cases where books of accounts are maintained outside India, within reasonable time, the directors may be submitted copies. Right?
Like this can be like, say the same company has a foreign existence. Like for example, for example, my father stays in Malaysia, so I have a company which is registered in Bangalore, but I have a subsidiary in a branch in Malaysia. That's an international branch. But for that one's data to see, I have to make a specific resolution and I get a specific time frame where I can see that data. Is it right?
Correct.
Is there any time frame given for this, like where how long you can be like permitted to check the international subsidiaries data and the things like financial records?
8 years only. 8 years.
8 years.
Yeah, that's a requirement for maintenance. That's a maximum. Yeah. Suppose you make an entry today. Next 8 years you need to maintain books of accounts.
Correct.
Right. There are exceptions. Suppose there is an inspection by central government.
Yes.
In that case, central government will tell you how many years you need to maintain. You need to preserve.
Okay.
Otherwise, it is 8 years.
As per the act, it is 8 years. But if the central government tells us with a specific time period, as the company, we have to make that amendment in the.
Correct. You need to maintain. You need to maintain in that extended period.
Yes.
Right. Tomorrow, take an example. There is some operation mismanagement reported by shareholders.
Correct.
Okay. Now, central government has come back and said, last 15 years documents I want to inspect.
Correct.
Right. Or last 15 years you need to maintain. You can't dispose of.
Correct. So in that case, we have to make that maintain the records up to 15 years.
Look, even otherwise, today entry is made. Next 8 years, anyhow you will maintain.
Correct.
And it does not automatically mean that you will dispose of. Disposal requires board of directors approval. Please remember. Right. If you want to dispose even after 8 years, you need specific board resolution, board of directors approval.
Then only it can be disposed of.
Yeah.
So by virtue of the maintenance, it is default is 8 years unless and until it is provided by the central government for a specific extended period. But for disposing of the records, there's a significant approval of board of directors is required. Then only it can be like either it can be disposed after 8 years or so. And at the same time, for checking of the books of accounts of a subsidiary, also we need a board resolution. However,
Yes, of the holding
50% of the
company.
board has to unanimously approve it for the inspection.
Majority.
Majority. Sorry, majority.
Look, unanimously is the entire board is in favor.
Yeah.
Majority is your 3/4 are in favor. That is sufficient.
Yeah.
Right?
Yeah. And in case of the foreign subsidiary, also the same.
Yeah. So again, in case of foreign subsidiary, if the director wants to inspect books of accounts maintained outside India, so within 15 days, company needs to submit. That company can take 15 days time. Within 15 days, it needs to provide service the request.
Yeah, the data to the director.
Yeah. So today, if the director has made any request for inspection, within next 15 days, company needs to provide the documents to him for inspection. Look at the last point, the financial information required under sub-rule 2.3. Please read out.
Which one, Manoj?
Books of accounts in respect of branch office.
The last point. The financial information required under sub-rule 2 and 3 shall be sought for.
See, sub-rule 2 and 3 is, that is one your maintenance in principal place. Another one is branch office.
Correct.
Right. Yeah.
Shall be sought for by the director himself and not by or through his power of attorney holder and agents or representative. Rule 4 of 4.
So please remember or mark it as star. You may get a question with this saying so and so is a director of the company. Director is not in India but wants to inspect books of accounts through some agent. Right, whether it is possible or not. Okay, next, preservation of books of accounts. We have discussed this. Unless an inspection, inquiry, investigation is ordered, minimum period is 8 years. What about your MGT1? What is MGT1? I want to maintain MGT1 other than the place of registered office. What is MGT1?
Register of members of the shareholders.
Register of members, correct. Right? Your equity shareholders. What is the process for maintenance of registered registers other than the registered office?
1/10 of the members should have been located in that city.
Correct. Or
approval in the shareholders.
Right. So that is the only condition, right? So 1/10 should be residing in that place, and special resolution it should be passed.
Special resolution was it there, sir?
Special resolution is not there.
Not sure.
No, it is about register of
members.
Yeah.
I recall special resolution. Can anyone confirm?
Yes.
1/10 or 1/10?
Register.
I think in the previous class we discussed, right?
Yes, sir. Special resolution should be passed.
Okay, preservation of books of accounts. Please remember, very, very important. Again, I'm emphasizing this because this chapter, you will get bare minimum of 8 marks. Right, so look at the importance of this chapter. Right, so that is why there are small topics which you need to remember. Other than the inspection investigation, it will be 8 years. Otherwise, as a central government may prescribe. Now, persons responsible for maintenance of books. Mark it as very, very important. And the penalty clause, the next page. Now in the exams you will get a question saying XYZ company did not maintain books of accounts. Who is liable for this and what are the penalties? Right, as informed your managing director, WTD in finance, in charge of finance. Look, in case there are multiple WTDs, only WTD in charge of finance will be liable. Right? Your CFO or any other person charged by the board with the duty of compliance with 128. Penalty for contravention. Very punishable with fine not less than 50,000, which may extend up to 5 lakhs. You're able to understand, right?
Yes.
Right, again, this is very, very important. Person is responsible to maintain books of accounts. Right, come to page number 313. Your penalty also is very important. Look, there are certain penalties which you need to buy at any cost because that will directly fetch your marks. For example, your 203, right, your 128, right, your which else, 172, financial statements. Do you recall anywhere discussing financial statements?
Powers of the board.
Correct. What does it say?
Discussion of the financial statement to the.
Sorry, repeat again.
Discussion of the financial statement or presentation of the financial statement.
Financial statements
And board's report, correct?
and board's report.
Yes, sir.
Okay. Where else we have discussed this? So which means it needs to be done in the board meeting or through VC,
Yes.
correct? Anywhere else we discuss this?
CS.
Yes, for limits purpose we discussed.
Yes, sir.
Based on last 3
Then very important, we discuss somewhere else. Where else we discuss this? What are the 4 ordinary business?
Approval of financial statements.
Approval of financial statements, including consolidation, if any, right? Okay, so as we were discussing, financial statement should give a true and fair view.
True and fair view. The clear picture of it.
Correct. So books of accounts are prepared by the management,
Yes.
and because of this true and fair view, your audit is done. Your auditors verify, vouch,
Yes.
saying whatever management has done is giving true and fair view.
No.
There is no material impact, material fraud that is reported, or genuine transactions. Right? Please remember, your auditors do not prepare the books of accounts. They only vouch, they only audit. Books of accounts are prepared by the management. Right? Whatever accounts management prepares, your auditors are only verifying that. Vouching. You're able to understand, right? Now, law says your financial statement needs to be maintained as per Schedule 3 format, or if your company covered in banking sector or engaged in generation of electricity, or your insurance company, then as per the specific law, if they have anything, please maintain accordingly. You remember Section 1 of the Companies Act we discussed? What is Section 1? In the first class we discussed.
Applicability.
Sorry?
Applicability.
Correct. Applicability. What does it say?
Applies to all companies except where specific act is governing that company.
Correct. Like wherever specific acts are governing, then to that extent only it will be applicable. So the specific provision will override in case there is any conflict. Right? So that is why for banking companies, for insurance companies, for other electricity companies, need not to maintain as per Schedule 3. They can follow their format given as per their law. That is, your insurance companies covered by IRDAI, right? Your banking companies are covered by your Banking Regulation Act. Your electricities are covered by the Electricity Act, right? So these financial statements, before it is presented to shareholders, please remember it needs to be approved by the board of directors. Right? It needs to be approved, signed, and then submitted to the shareholders for adoption. Right? In every annual general meeting, these accounts needs to be adopted. So that is why relevance of financial statements is very important. Okay, that is when your shareholders comes to know how the company is
performed.
Correct, and where are the monies moving. Right, so this is one of the ordinary business, which means it needs to be taken up only in AGM. Person responsible for compliance. Who are the persons responsible for compliance?
KMD.
Correct.
MD, WTD,
WTO.
Interim Finance, CFO, other person of a company charged by the board with the duty of the complying with the requirements of the section 129.
Correct. Yeah. Please remember, even penalty section, please remember.
Okay.
Right. This is very, very important. Come to page number 314, consolidated financial statements. So, look, every company needs to maintain accounts on standalone basis, right? Which means company specific. Okay, if it is Wipro Limited, Wipro needs to give a standalone. That is sufficient. But wherever Wipro has a subsidiary or Wipro has an associate or a JV, in that case, you need to give a consolidation. Right, consolidated books of accounts. The reason being is shareholders also wants to know their performance, because you have made an investment, right? It also needs to, they also need to be aware how the whatever investment that you have made, how it is performing. What are the status of those companies, whether it is profitable or not profitable. On consolidation, what is the turnover? What is the revenue? Right? Please remember, consolidation is only applicable if the company has subsidiaries, associates,
or joint ventures.
Correct. Otherwise, usually only standalone financial statements are laid before the shareholders, approved and adopted. Infosys Limited has more than 100 plus subsidiaries, right? Which means it needs to consolidate all the books of accounts. There may be chances that Infosys has a subsidiary in somewhere in, say, Ireland. As per the requirement, Ireland law, accounts need not to be audited. In that case, your unaudited books are considered for consolidation purpose. Right? Only in India, the law says audited accounts needs to be presented, approved and presented. But there may be cases wherein your outside India subsidiaries, mandatory audit need not be there. Right? In that case, unaudited, only thing the law says, it needs to be translated into English so that the shareholders can understand.
So, which means, Manoj, in the case of consolidated and statements, let's say if an Indian company, like we're talking about Infosys, or let's take the company where I'm working is a US-based company, the headquarters is in New York. Now, the company has 65 different countries where the operation is.
Correct.
I mean, every country has its own independent leadership team and finance team and everything. So in that case also, this parent company has to file the report into the authorities, right?
Look, we are not talking about holding company being outside India. We are talking about holding company in India having subsidiaries or JV or associates outside India.
Companies which are within India will have to consolidate that. So for example...
No. I'm saying holding company needs to be in India for consolidation. If the holding company is outside India, then the requirement of consolidation does not arise. Holding company needs to be in India. Right? If it has subsidiaries across the globe, then it needs to consolidate. Or if it has in India, needs to consolidate. Anyway, in India, you have audit concept. Other companies also needs audit. Consolidation becomes easy. But whereas in some other countries where audit is not mandatory, then consolidation becomes difficult, wherein in one jurisdiction you have accounts which are audited, in other jurisdiction
it is not audited.
Exactly. Okay, so that is a challenge.
And also, and also the challenge is because it's the currency variation, you have to keep calculating that currency variation, the change in the value of the currency, all that.
Yes. Right, if the company has associate, what is the associate criteria? How does a company become associate? JV. Okay, tell me what is subsidiary? Subsidiary, how do you establish a subsidiary?
When the parent company holds, when a parent company
When the parent company holds the more than 51% of the, more than 51% of shares
In other company.
in
Right,
other
or a
company.
body corporate, right?
Yes, sir.
And what about associate and JV?
21% or more.
That 1%.
More than 20%, right?
Yes.
Up to 50.
Yes.
So in that case, you will establish an associate or a JV relationship. Then you need to consolidate. Along with your standalone, you need to present consolidation also. You're able to understand, right?
Yes, sir.
Let me.
This consolidated financial statement will be authorized by board in the members in AGM.
Oh, first, it will be approved by the board of directors. Then it needs to be approved and adopted at AGM.
AGM, and then it will be filed to ROC, sir.
Correct. Within next 30 days, it needs to be filed in AOC 4.
Okay.
Right. Please remember the chain. First, board of directors call for a meeting. They approve the accounts. Sign off.
Sign off.
Right. Once the sign off is done,
To sign off is done.
It is
the
presented
AGM
to the members in the AGM.
correct. AGM notice is sent.
The notice is sent.
Then AGM is called.
And AGM is called.
In AGM, it is
Presented.
adopted.
Adopted. The process flow again. This one more. So the process flow is like this. First, the board in the board meeting, the board of directors approves the financial statements,
Correct. Including the consolidated.
including the consolidation statements. Then the notice for the AGM is released out, and
Correct.
in the AGM, the board of directors put the report in front of the members where it has been presented and adopted.
Exactly. Yes.
And then once that adoption is done, within 30 days, it has been filed in AOC 4.
Correct. Correct. Correct.
And even if it's not adopted, also it should be filed with ROC, right?
Yes. 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 When does it not get adopted?
If members not agree or AGM is
Do not approve. Do not approve, right? Members do not approve. In that case, it becomes unadopted. Can you place unaudited accounts before shareholders?
No. No.
if there is no compliance requirement for audit, internal audit is done, right?
We are talking about statutory audit.
No.
Financial statements are prepared by management, audited by statutory auditors. Internal auditors are only support system to the management. Right? They are only giving the process of how the books of accounts need to be maintained to the management. Basis that report, your stat auditors may rely upon your internal audit reports also, quarterly reports. But internal audits are only to go strengthen your management process, internal process. Right? Your sign off, your audit happens by your stat auditors, not your internal auditors.
So what's the answer for your question, sir? That it can be
Always
provided.
audited, always audited. Unaudited cannot be placed before the shareholders. You need to always place audited. Board of directors needs to approve accounts which are audited. Right? You remember extension of AGM concept?
Yes, sir.
Can you tell me?
Means the registrar of company can provide the time only up to the can provide the extension up to the 3 months. Beyond 3 months, it cannot be done. Means suppose if the beyond 3 months if the extension happens, it is the violating the company law.
Correct. Look, a lot of the times accounts are not audited on time. That is when you seek for extension of AGM.
Okay.
You're able to understand, right? Right. Sometimes, what is the due date of AGM?
30th September.
30th September, right? So practically within which I need to sign off, which means the board of directors needs to approve accounts. By which date board of directors needs to approve and sign off?
21 days before.
Perfect. Why 21 days before?
21 clear days is for the notice period. So,
correct. So which means before that board of directors needs to meet and approve the accounts, then proper notice has to be given to the members, right? So basically, if it is due date is 30th September, your sign off has to happen within first week of September. So a lot of cases, sign off does not happen within first week. That is when your problem of your process of extension to ROC, that is when your auditor informs the management saying, look, there is a problem, you're not coming into consonance, this problem needs to be discussed, you have not yet addressed this issue, your audit is not completed. That is when the management seeks for an extension of AGM. I'm saying this is one of the reason, not necessarily this is the only reason. This is one of the reason. Right? Or it may be a case where your directors, all directors are traveling to different part of the countries, or they are to attend some investor meet, exhibition. They are not available for entire 2 weeks. Right? In that case, extension. You are able to understand the connect between that and this. Okay, go back to our board's report. We have discussed, we have note down, right? Board of Directors report. So in that, please note down a point on standalone and consolidation. So if there is a consolidation, company needs to give a salient feature of the report of subsidiaries in AOC 1.
Sir, means can you repeat, sir? Actually,
in the board's report, initially we had made some points, right?
Yes.
So to that you add on for standalone point on standalone and console. On if the company's console is applicable, then it needs to give a salient feature of subsidiary JV associates in AOC 1. There is a format called AOC 1. So wherever the subsidiaries JV and associate provision is applicable, it needs to give a detail.
So the point is consolidate financial statement or salient features of JV subsidiaries.
Correct. Wherever console is applicable, then it needs to submit AOC 1. That details will form a part of your board's report.
Okay, sir.
You're able to see my screen?
Yeah, yes, sir.
See, this is a Infosys Board of Directors report. Look what is it stating.
We, along with the subsidiaries, providing consulting, technology outsourcing, and the next generation, the digital services. At the beginning of the year, we had 24 direct subsidiaries and 62 step-down subsidiaries. As on
Okay, 1 minute. What is step down subsidiary?
Subsidiary of subsidiary.
Subsidiaries of subsidiary, right? So which means you have made an investment in the subsidiary. Subsidiary has further made an investment in another company. That is a step down, right? Direct subsidiaries, you are making an investment in another company.
Step-down subsidiaries means where we have made the investment, they are making further.
Exactly. Again, that is also subsidiary, which means you are establishing subsidiary. There in that chain also there is a subsidiary relationship. That is a step down.
But that
Right,
subsidiary
maximum-
also, like in this case, if we are talking about Infosys has got 24 direct subsidiaries and those subsidiaries are making further investment. So Infosys
Yes.
will also have the control on those subsidiaries also, right?
Exactly. Ultimate, you are the holding company, right? You are ultimate holding company,
Yes.
right? Even so entire consolidation you need to do at Infosys level.
Yes. So this 24 plus the 62 step down all together,
Yes.
they will have to do it in the Infosys main
Yes.
financial report.
Yes. Look, they're saying at the beginning of the year we had 24.
Yes.
Look, as on end of the year, what they're saying.
We have 27 direct subsidiaries and 50 step down, which means
So which means 3 they've acquired during the year. They've made investment in 3,
yes,
right?
yes,
And they've made a disinvestment in 12.
12. Correct.
You're able to understand, right?
Yes.
disinvestment means what, sir? Actually,
Which one?
disinvestment means what?
Taking out the investment.
Okay, taking off the investment.
Selling off the stake and getting the
Yeah.
money back into the company.
Yeah. See, read this.
During the year, the board of directors reviewed the affairs of the subsidiaries in accordance with section 129(3) of the Companies Act 2013. We have prepared the consolidated financial statements of the company, which form part of this integrated annual report. Further, a statement containing the salient features of the financial statements of our subsidiaries in the prescribed format AOC1 is appended as Annexure 1 to the board's report. The statement also provides detail of the performance and financial position of each of the subsidiaries, along with the changes that occurred during fiscal 2022.
Okay. See, this is Annexure 1.
Yes, statement 1.
So this is the format given by the MCA, that is the government, right, provided in the Companies Act.
Yes.
See, salient features of subsidiary associate.
Subsidiary shares, associates, companies.
Okay, see, Infosys, BPM Limited, Edge Work Systems.
Infosys, McCartney's systems.
Okay, see wherever USD, GBP, Euro, this all outside India.
So this
Right.
amount is on the date of the preparation of this financial statement. What was the exchange rate that they will take?
31st March 2022. That is the closing of financial year.
Correct. On that
Right.
day, whatever the rate will be there, that rate they will take, right?
Yes. Right. So total 84. Okay, so 84 accounts they will consolidate. You're able to see this point? Point number 1.
Yes.
41st annual general.
Financial statements.
You're able to understand, right?
Yes, sir.
So So when is consolidation applicable?
Consolidation.
When there are subsidiaries.
Subsidiary,
Associate.
JV or hold.
The subsidiaries JV and the associate.
Okay, whether companies, suppose I have a subsidiary in Singapore, whether that company needs to follow Schedule 3. Schedule 3 is as per Companies Act.
No.
Why no? And why yes?
It applies to the territory of India within territory.
Correct. So Schedule 3 applicable to India, but however, for consolidation purpose, you need to, as much as possible, bring it in line with Schedule 3. Reporting needs to be in line as much as possible, not mandatory. Right?
But Manoj, just a thought about in the Infosys board report which you showed. Let's say where the direct subsidiaries are there, it's applicable that Infosys has to do a consolidation. When it comes to step down that one, you see there are a lot of foreign subsidiaries where they're doing the calculation at a time. In that case, how it will be like you're telling, like, because they are the subsidiaries of subsidiaries, so they're automatically included.
Who's controlling? You are the ultimate control, right? There are different entities, but you are controlling.
Yes.
So the moment you make an investment, so you need to disclose if you are able to establish that JV associate.
Okay.
So Infosys has made an investment in, say, A company.
Correct.
It becomes subsidiary. Now A company has made a further investment in B. That relationship is there. That is either associate, JV, subsidiary.
Correct.
In that case, ultimate beneficiary is you only, right?
Yes.
Directly, you may not be controlling that B company, but through A company, you are controlling.
My subsidiary is making an investment.
Yeah.
So ultimately, the benefit is going to share it to me.
Yes. So as per Indian law, only you have 2 layers. You cannot make investment in more than 2 layers. Please remember.
Okay.
So that is Infosys has made investment in 1 layer, subsidiary. This company has made investment in 1 company.
That's it.
The layer has to stop there in B company. Please remember, B cannot make further investment. If it makes, it cannot. You should not establish relationship of JV associate. That is not allowed in Indian law. But however, if you are making investment outside India, there it is exempt. Which means, take an example, company has made investment in Singapore. Now your Singapore company is a subsidiary company. Singapore further can make investment in Malaysia, further can make in Australia, further it can make in Indonesia. That is possible. Because jurisdiction is outside India. Layers need not be that 2 minimum layers, maximum layers need not be applied for provisions outside India. That is applicable only in India.
If I make the investment, let's say again I'm taking the same example, like my subsidiary who is in Malaysia, he makes it further investment, that is applicable. Allowed because that's a separate out of
that is outside India. Yes, that is allowed. Yes,
but I'm not allowed as a parent company. I'm not allowed to make that 3rd layer of investment. Right?
You are a parent company situated in India.
Correct.
You want to make an investment in Singapore.
Correct.
Layer 1.
Yes.
Correct. Investment, subsidiary. Now your Singapore company is subsidiary. Singapore company wants to invest in Malaysia. That is a layer 2.
Yes.
If both were in India, the buck should have stopped there.
Exactly.
In Malaysia. But since both are outside India, this layering investment outside India is not applicable.
Okay.
So which means investment in Singapore, investment in Malaysia. Malaysia can further invest in some other country.
Okay.
Right. So that series of step down can establish outside India.
Yes.
But in India, it is not allowed. Only 2, maximum 2.
In India, I can only go up to 2 layers. But if my
subsidiary
is outside of India, then I can have the boundary can be larger. It cannot be.
Yeah. Your step down investments can be made in any series. So in India, it is direct investment and step down.
Step down.
You're able to understand, right?
Yes.
Okay, any doubts still here before we proceed further? See, okay, tell me one thing. Infosys has subsidiary, direct subsidiary, right?
Right.
Say A Limited, incorporated in India. Now A Limited has not audited its books of accounts. Can Infosys go ahead and consolidate?
No, sir.
What is the reason?
Every company in India has to follow Schedule 3.
Yes, needs to follow. Yes, then?
And it should be audited, should be given for adoption.
Correct, which means first it needs to be audited, right? So which means Infosys has to make sure subsidiary company has to adopt his accounts first. That is the board of directors needs to approve, right? It is a job of Infosys now to make sure all his subsidiaries that is incorporated in India to get his books of accounts audited and approved. Once the board of directors approved, then Infosys Limited board can approve standalone and consolidate. You're able to understand. However, if the law outside India, if the consolidation is outside India, then it can directly consolidate. That's not a problem, because as per the books of accounts of the law, your audit need not be mandatory, right? But wherever it is mandatory, yes, it needs to be audited first and approved first. You're able to understand. Now Infosys has 27 direct subsidiaries, right? Infosys, before placing the matter before the board for adoption, it needs to make sure all
27 have consolidated their financial statements.
No, audit. It needs to standalone.
Yeah, auditing.
Standalone as audited.
Yes.
Board of directors of all standalone as first approved, then it is presented before shareholders. Right? Not necessarily your AGM has happened, but board of directors needs to approve that and sign off. Then only Infosys board can approve the consolidation. Please remember, this is a very challenging, even if you go for a training, this is basic and challenging task.
All the subsidiaries first have to audit the accounts, and the subsidiaries board has to approve.
Correct.
That has to come to the Infosys board, and then
Correct.
Infosys board sign up that reports, and then that will be presented in front of the members in the AGM, where it will be adopted.
So look, practically we are talking about 23 days, right?
Yes.
For approval. In case of consolidation, look, auditors need even more time, right? Because consolidation also takes place.
Yes.
It consumes time.
Exactly.
Till now, 23 days we spoke about standalone, right? That is a standard time as per the act. Now for a consolidation, right, practically it may take another 20-30 days easy for consolidation, right? Other than
subsidiaries and
so
companies.
which means in the month of August, right, you need to approve your accounts for a standalone so that the consolidation can happen, and then do it.
So the 23 days, where is it mentioned? It should be maintained, consolidated within 23 days, is it?
Yeah, that is your AGM notice provision, right?
Plus 2 days.
Yeah, so along with your AGM notice, you need to circulate these financial statements. You remember that?
Yeah.
Right, along with your copy.
Attachment.
Correct. Attachment goes an attachment, yes. You're able to understand the practical scenarios.
Yes.
So wherever company has a subsidiary, that is a challenge for holding company board of directors.
But Mano, thing is, board has to first approve the financial statement, then it will be presented in the AGM. Now, in this, that financial statement what board has approved needs to be attached in the notice of the AGM.
Correct. Correct.
But then,
Look, you are writing in the agenda to approve and adopt,
correct.
right?
Hmm.
Without seeing the accounts, how will the shareholders approve?
Exactly. Because so that time period that they have to go through that account, so that
Yes.
it is presented, they will be like
Yes.
giving their consent. Okay.
Yes. You saw the first agenda item, right?
Yes.
You are saying to approve and adopt standalone and including consolidation.
Yes, financial statement.
Without giving them the standalone and console, how do you expect them to approve?
Yes, correct. They need to go the numbers and other
Right?
information.
Just pick, you buy any shares of any company that is listed on stock exchange, any one share, that is sufficient. During the time of AGM, you will get this notice.
Yeah, I remember last time I asked you the question where I hold 5 shares of Tata Steel and they sent me the report,
Yeah.
whole report. It came in the PDF.
Correct. So in the entire annual report, there will be bifurcation.
Yeah.
Your board's report, your console, your financials, standalone, right? Your corporate governance report. All this forms part of your annual report.
It's a complete thick report that PDF
Yes.
comes in.
Yes. You're able to understand, right?
Yeah. I got it.
Okay. Any doubts still here? Can you just brief up whatever we have discussed today? Because in terms of exam, this is huge. Is minutes required to be maintained for 8 years? Or if the central government says more than 8 years, only on inspection it needs to be maintained, correct? Minutes of the board of directors and minutes of the general meeting. Unless inspection is ordered, it needs to be maintained only for 8 years.
8 years.
Minutes should be maintained permanently also.
Minutes should be maintained permanently. Please remember, your statutory registers needs to be maintained permanently. There is no 8-year provision. Right? Your books of accounts only, your vouchers and all the other things needs to be maintained for 8 years unless inspection is ordered. Please do not forget this. Tomorrow, if you are going for an interview or for an exam, the examiner will say, who taught you Companies Act? Okay, don't, please, for my sake, please remember, minutes will be kept for lifelong. Right? 8-year provision is for books of accounts.
Even charge, right? Charge.
Yeah, so that is also registers, right? So registers also needs to be maintained for your CHG 7, right?
Yes, sir.
Yeah.
That is lifelong.
Yeah, all the statutory registers needs to be maintained for lifelong. Any doubts still here? Okay, come to page number 315. Periodic filing of financial results. As of now, only listed companies which are listed in India needs to publish results on quarterly basis. So within 45 days from the end of each quarter, if it is the last quarter, within 60 days. Right, your private company, unlisted public company need not to publish quarterly results. Right, only annual results are required to be done. Okay, government as via amendment has inserted this provision. However, it is not effective as on date. So tomorrow, government can say such class of companies needs to provide periodic results. Only then this provision will be applicable, 129A. As of now, this provision is not effective.
That means the weekly report is only once in a year?
Quarterly. 4 quarters in a year, right?
Yeah, correct.
So listed companies listed on stock exchange needs to submit quarterly results within 45 days from the closure of.
And if it is the last quarter, for the first 3 quarters, it is 45 days. For the last quarter, it is between January to March, it is 60 days.
Correct. Within next 60 days, that is April and May, right? Within 40th
May, from 1st of April to May. I mean March 1st to.
Correct. So within that period, you need to give a results to stock exchange.
Yes, quarterly.
So quarterly accounts need not be audited. Only your audit accounts annual accounts are mandatory, needs to be audited. Quarterly accounts, it can be audited or unaudited. If you are presenting unaudited, you need to submit LRR, limited review report. LRR comes into picture only if quarterly accounts are unaudited. If accounts are audited, LRR is not applicable. This provision is not applicable for private company, unlisted public company as on date. Please remember. However, there is a provision in the Act. That is why they are saying central government may require such class of companies. This class of companies not yet prescribed. This section is not yet notified. You're able to understand?
Yeah.
What is that LRR, sir? LLR?
Limited review report.
That is for unaudited.
Listed. Correct. Only if you are giving unaudited results, along with unaudited results, you need to give LRR. Okay. Just Google any company. Just Google saying Infosys quarterly results. You will get to know. Or Wipro quarterly results. Look, Infosys is kind of company, they publish quarterly audits. Right. So your internal control system is that strong. Right. They don't wait for yearly audits. You're able to understand, right? Okay. Quickly come to section number 130. Mark it as very, very important. Reopening of accounts. Now, please remember there is a point number 2. When you can open, when you can recast, right? When you can recast the accounts is only when the directors feels that the accounts were prepared in the fraudulent manner. That is case number 1. Case number 2, there is a doubt on reliability of financial statements. Right? During the period it was mismanaged. Only in these 2 cases accounts can be reopened, recasted. This particular section is very, very important. Right? Now, who should feel this? That this is mismanaged or this is fraudulent? Provided in point number 1. The aforesaid, this 5 category people needs to feel that the accounts were prepared in fraudulent manner or it was mismanagement. The reliability is, there is a doubt on reliability. Only in this case, it can be recasted, reopened. In no case, it can be reopened, recasted. Please remember that. Okay, practically what happens is, suppose take an example in income tax, right? Income tax authority submits a letter to submits an application to NCLT saying, look, there is this company, we find that there is something wrong, right? We find that the tax or GST related part are not in consonance. We would like to visit their books of accounts. In that case, tribunal will order for restatement. So any of this category A, B, C, D, E, they need to submit application to NCLT. Okay, then only it can be recasted or reopened. You're able to understand, right? Who is this last person? Point number E.
An order in this regard is
Point number D. Point number D.
Court or competent jurisdiction of the tribunal.
No, point number D, last point.
Third
Any
point,
person.
last number D, you're saying, right?
Yeah.
No, sorry.
Who is this any person concerned?
The question comes from
Study regulated in the policy or
Member.
Concerned. What is concerned? Which means there should be something to challenge, right? He needs to have some loss, some locus standi, right? No, it can be anyone. That person needs to have a locus standi is what I'm saying. Which means he needs to prove to the court how this has impacted him or how it is concerned him. Right? He needs, so which means any third party cannot make an application for recastment. So which means somebody has to prove that they've acted upon this and there is a loss or something similar. Right? Locus standi. Please remember the word.
Locus standi.
Say, for example, there are sometimes, say, the big investors who have invested.
Correct.
Okay, now because of some kind of fraudulent activity or some kind of mismanaging, the market crashed
Yes.
and they lost a significant amount of money.
Yes.
Where they go and they put that point that because of this activity
Yes.
of the company, there is a significant
Yes.
loss has happened. In case of, like, we can talk like Paytm got listed, the market got crashed, they lost a significant amount of money. Why the overpricing or would have happened, something they would have made planning. So the investor pushed this point, then the tribunal gives them the permission that they, in that
Can
case,
you, correct, but can actually investors of Paytm go ahead and open books of accounts under point number one, section number 130?
no.
Why? What is the reason?
Well, I'm not sure about the reason, but might be like they wanted to exit the market because they were not unsure.
Reason just we discussed. Just we discussed the reason.
Yeah, because it is the e-commerce company, sir.
No, read
No,
the
it's
point
not
number.
a financial legator.
What does the point number 2 states?
The affairs of the company were mismanaged during the relevant period, casting a doubt on the reliability of the financial statements.
Can you actually, being an investor, can you actually prove that this Paytm has done fraud or previously casting mismanagement on the company?
No.
Right? Only in that case you can file under 130. Please remember, if shareholders' value is eroded, you can't come under 130. Right? Why? Reason is only these two. You need to fulfill these 2 points.
Fulfill this point.
Please remember.
Like
Right? How far? Again, how far you can restate? Maximum 8 years. Because books of accounts needs to be maintained for 8 years. Maximum that you can recast, reopen for last 8 years.
For last 8 years.
But however, in case of inspection, investigation that has happened, even prior to that, it can be opened, recasted. Okay. Any doubts on section 130? Please remember the section also.
Okay, sir. The accounts, any other statutory regulatory body or
Okay, come to page number 316.
Sir means one small question, sir, means the can a tribunal can give notice to the central government actually?
On what basis?
means the tribunal shall give the notice to the third one actually, the reopening of the accounts actually. They are saying here the tribunal shall give to the notice to central government, income tax authorities, the security and exchange board, any other the statutory.
Look at the last line. Look at the last line.
Okay.
An order in this regard is made by a court of contempt jurisdiction or the tribunal. The first point, first option, last point.
Point number 3, point number D, last line.
Any
Okay.
other statutory
Any other statutory
resolution made by central government or authorities.
concern and shall take into consideration and representation taken.
See, before passing an order, it will give a notice to them saying we are passing this order.
Or the authorities.
Maybe like the government might have made a point
Okay.
of doubt that this might have the mismanage of accounts or something in case of
Any other persons before passing the restriction. Okay.
Okay, 316. Page number 316. Section 131, wherein directors can revise the financial statements and board of directors report. Please understand the difference between section 130 and section 131. Okay? Section 131, directors can go to NCLT, right, to what? To revise your board of directors report and financial statements. But however, they can't go under 130. What is the reason? What is the reason they can't? Why the directors can't go under 130?
They have to prove that accounts is prepared in a fraudulent manner or affairs were in mismanaged.
Correct. So which means that any other person concerned,
Yeah.
you need to prove, as a director, you need to prove any other. How did you involve loss? How did this impact you? Okay, other than this, directors cannot go there. Okay, that is only applicable for central government, SEBI, income tax, all those persons.
all those authorities who can go and make a application.
Yes.
But in case of 131, the
Directors
directors directly
themselves.
approach to the tribunal for the revision in the board's report or
Correct. If they feel that some things in Schedule 3 are not matching or some disclosure in board's report is not being made, okay, it can go back maximum 3 years.
3 years.
Maximum 3 years. That is 2022, 2019 maximum.
Yes.
Okay, so that is when I can revise. Prior to that period, I cannot revise my financial statements and board of directors report.
Sir, one doubt.
Sir, without the relevant earlier accounts, no, sir, we can go to the directors can approach, no, sir?
Which one, madam?
No, sir, as you tell that one the revision of the financial statement, no, sir. The directors can approch to the
Yes,
revision
yes.
of it. Without
Yeah,
the fraudulent also, you can go. The director can go.
Yes.
Satisfying these two conditions also, they can approach
Yes.
to the.
Under 130, you need to incur some loss. You need to prove locus standi, right? And two conditions are must. But here there is no such conditions. You may take that is also one of the condition, right?
So directors can also file in 130 if they are contravened or some loss occurred for them.
No, no.
Locus standi needs to be proved. That's what I'm saying. So which means on an individual basis, as a director, you're an individual director. How did you suffer loss because of which you want to recast the accounts?
Okay. Like he was disqualified based on something and he can show it through opening the books of accounts. It's like that.
We are talking mainly on financial terms, right?
The thing under section 130 and 131, what's the difference is in 130 we need to prove whether the company had mismanaged the finances, where the reports are not inappropriate, or there has been some kind of fraudulent activity which was going on where it incurred the company faced a loss where they want to recast the financial statements.
Mismanaged and fraudulent activity, yes. Under 130, yes.
Under 130. When it 131, maybe like the board of directors in the board report they have missed the point to be mentioned,
Correct.
or
Correct.
the or they
Not
have
as per
found out
Schedule
that
3.
as per Schedule 3 they are not aligned with 1 or 2 points which they want to recast, for which they can go up to 3 years in the reverse direction.
Correct. Correct. Correct.
Got it.
Again, similar point also, before passing an order, tribunal shall give notice to concerned authorities. Right? So, another important point is revision can happen only once in a financial year.
Okay.
Right? So, suppose you have done a revision of books of accounts of 2021, financial statements for 2021. Okay? And you have got an order. Again, in the same year, you can't do a revision again of the same year.
Now, one question in section 131 is, let's say that directors, they approached the tribunal for a revision and they got the order. They went back and did the revision in the board's report and the financial statement in 2021. Do they need to resubmit that to the authorities?
Yes, you need to refile. Yes, you have form AOC 4, right? We discussed.
AOC 4, again they have to refile because it's modified.
Okay. Yes.
And that within how many days? That will
be within 30 days from the recastment.
30 days from the
revision. Yes, revision. Yes. You're able to understand, right?
Yes.
Yes, sir.
Okay, give me a second. So, any doubts still here?
Great. No, sir.
You want to see the screen?
Yes, sir.
Okay. Please look at the question number 1, 5 marks. Please answer.
So in the case of point number 2, they will go to the tribunal. They will ask for a modification.
Which section is applicable? Which section is applicable?
Section
130 or
131. 131.
Point number 2.
131. The directors will approach the tribunal for a revision in the financial statement mentioning the point, and there, after the revision is done, they will file it in AOC 4 to the concerned authority in 30 days.
Okay, so you need to clearly state that before passing this order, the tribunal will give a notice and only last 3 years accounts can be revised. So all those points you need to write for 2.5 marks.
Okay.
What about question number 1?
Board of
Directors to the auditor, but it is not yet been taken.
They have not yet been told by the shareholders in the general meeting.
They will pass
the resolution.
They have to be formed in the ASC 1.
No.
Standalone.
No.
They can revise.
No, you tell me in question number 2, what is the process before revising? What is the prerequisite? You tell me from the board of directors approval.
The board of directors approved the tribunal mentioning the points why they want to revise the statement, and the tribunal.
No, before that, you tell me the approval process of financial statements.
Approval process. The board first goes to the financial statements and signs the reports, and then the AGM notice is circulated to all the members.
Correct.
Then with the attachment of the financial statement, then in the AGM the financial statements have been presented by the board of directors and it has been adopted. and then
Perfect.
the filing is been done
Correct.
subsequently in AOC 4.
Correct. Correct. So whatever you said, 100% correct. Now you go back to question number 1. What are you missing in question number 1 in the process that you told?
Okay.
It is not been approved by the shareholders.
So if it is not been approved, right, which is not yet adopted, right? So without adoption, board of directors can still revise, right?
Yes.
Because
Yes.
the shareholders have not yet approved.
Yes.
Only if it is approved and adopted, then the process of section 130 comes into picture. Please remember.
No, if it is adopted and approved, then it comes under section 131, right?
That's what 131. Your point number 2 here. Covered under point number 2.
Yes.
Right. So in the given case, point number 1,
Correct.
still shareholders have not yet approved.
Correct. So
Right,
it is
so
with
we-
the board only. Technically, it is
Correct.
with the board only.
Exactly. You can still revise, right?
Yes.
You need not to approach tribunal. You're getting my point.
Yes. Because it's still with the board only, because with the auditor it is not yet
Yes.
completed.
Yes.
Sir, in the first option, I understood that in second option you have to go with the tribunal for changes that is applied to section 131. In the first question, what are the filings that they would have already done? Because on the quarterly basis they would have filed, right?
That is for listed company we discussed. No quarterly filing
Yeah,
for listed companies.
Yeah.
Right. Again, your quarterly filings, shareholders do not approve your quarterly filings.
It's only
Yes.
the board.
Only annual audited accounts, your shareholders approve. Right. In the case number 1, still before placing it to shareholders, before shareholders are approved, you want to revise.
Yes.
Yes.
Then why you need to go under 131?
Yes.
We don't need, because it's not yet adopted also.
Exactly. You're able to understand.
But in quarterly report, that is only if the board is only signing up, right?
Yeah. In quarterly as per the requirement, as per LODR, right? I think regulation 33, right? There it says listed company needs to submit a quarterly results. Okay, as I said, quarterly may be audited or unaudited with LRR. That only board of directors approve.
Correct.
Only annual accounts go before the shareholders for adoption.
Correct.
Quarterly results do not go to shareholders. Please remember.
Got it. Understood.
Right?
Sir, then we have to say that according to section 130, you can go and revise with the audit, no, sir?
No.
130.
130 will not come. 130 comes when it is a fraudulent or mismatch
Yeah.
of the funds.
Yeah.
Here,
Right.
in case of question number 1, it will be like, as the reports have not been presented to the shareholders or it is not adopted, and the board can go and do the revisions in the report.
Correct. Exactly.
So this LRR is actually filed with the SEBI or RO?
A stock exchange. It's a stock exchange filing. It is done by listed company. Look, I'm saying, wait. So till now only Q2 accounts are prepared, right?
Yes. Standalone and consolidated. Oh, total. Last 3 months, last 6 months. Let's check the dashboard.
See, this is the quarterly results.
Correct. Condensed standalone financial statement under Indian accounting standard. NSE India. Logistics.
Mahindra Logistics Limited, right?
Yes.
Outcome of a board meeting. Unaudited,
consolidated and standalone financial results of the company for the quarter and half year ended 30th September 2021. Regulation 30, 33 and 47 of the Securities Exchange Board of India listing obligations and disclosure.
Here, read this point.
At the meeting held today, which Wednesday 27th October 2021, have inter alia approved the unaudited, consolidated and standalone financial results for the quarter and half year ended 30th September 2021, subject to limited review of the statutory auditor of the company.
Right.
Which the statutory auditor? Okay, Deloitte Haskins and Sells.
See, independent auditors review report.
On review of interim.
Whose auditors? Deloitte Haskins.
Sir, means once the company secretary of the Mahindra company means I want to see his name, sir. Once.
Brijbala
Bhatwal.
Brijbala Bhatwal. Okay, sir.
Any doubts still here?
No, sir. Sir, means one small means the books of account. You said it is up to for only for up to the 8 years means why, sir? Books of account means only it is for 8 years. Why?
No, books of accounts to be maintained is for the 8 years.
Okay.
The maintenance of books of accounts as per the act is like up to 8 years.
Please answer this point number B.
Books of accounts has to be kept only at the registered office of the company. As a consequence, you can leave your comment in this regard. Oh, very interesting.
Books of accounts have to be kept only at the registered office of the
be kept elsewhere, but that should be filed with ROC in AOC 5.
You're able to understand, right?
Yes, sir.
That's all. If you write whatever you're writing clearly as per the requirement, if you make that point and write, you will score marks.
Okay. Textbook would not have to look at the
Even if there is a change with the place of keeping it should be with the board's requisite majority, right?
Yeah. Look, board of directors always.
Board of directors means majority.
Anything we want to discuss, or shall we wind up for today?
Yes, sir.
Can wind up for today. Any questions? Payment. Written points will be considered.
Excuse me, sir. Can you explain once again the first question, sir, as you discussed last?
Yeah. Before I speak, anyone who understood can explain, then I'll add up on that.
The two questions that you gave, right?
Correct. Correct.
Yeah, in the
Yes.
first question, it is said that the board of directors have submitted the financial report. The financials, the reports are with the auditor. However, it is not yet presented to the shareholder. Now the board wants to make changes in the report. So can it do? So the answer to this is yes, as the reports have not been adopted in the annual general meeting and it is not yet presented, so the board can do, because technically the reports are with the board. Whereas in this case, in the second question, the reports have been submitted and it has been adopted. Now the board wants to make the changes. In that case, section 131 triggers in, where the board has to, the directors have to approach the tribunal, which is in case of NCLT, and they have to get a notice. When the NCLT issues a notice, yes, the books can be reopened, and there they make it. So in case it might be a board of in board reports a point which have been missing, or there might be some informations as per schedule 3 which is not aligning, there they want to make addition, that they can do, provided only up to the last 3 years report they can do. Going back, if it is 2020 up to 2019 to 2020, any report they can do, provided they have to mention. And once that is done, once the rectifications are done, they have to resubmit it to the authorities within 30 days from the date of the close in AOC 4. Over to you.
Yeah, that is, Madam, you understood, right?
Yes.
Usually process is board of directors approve and it is adopted by shareholders. Okay, only once shareholders adopt, you're considered as accounts has been adopted, not when board of directors approve. Right, so only this section 131 comes into picture is only when after shareholders approve. Before that, any revision can happen.
Submit ಆಯ್ತು ಅಡಾಪ್ಟ್ ಮಾಡಿದ್ದು ಆಯ್ತು ಬಟ್ ಕೆಲವು ಚೇಂಜಸ್ ಮಾಡಬೇಕು ಸೆಕ್ಷನ್ 131 will trigger ಮಾಡುತ್ತೆ.
Sorry, didn't get you.
Nagendra was actually setting up that links, in between the two questions.
Okay.
He's trying to establish the link in that question.
Yes, sir.
Look, it is all like a circle only, right? We have revised previous provisions. Now we have to go back and recollect because interlinking, as I initially mentioned.
Yes, sir.
Sir, in the second question, we assume that it has been adopted, and meaning that it's filed with
No. If it is approved, it's adopted.
Yeah, if it's approved, adopted. So you're telling in the second, we assume that it is filed.
Assumption. Question was clear, right?
No.
Yeah.
In the question, it said that the boards approved and also it was adopted by the shareholders. But my question is, if it's adopted by the shareholders, we assume that it is being filed with the ROC with AOC 4.
Filing requirement, it is taken by care by company, right? Yeah. If it is not taken care, then person liable will of default will be held liable, right? The moment it is adopted, you come under 131 for revision. Filing is a different thing. Only approval and adoption is required.
Okay. We don't look at the filing.
Filing is just a compliance part, that's all. Okay, then we'll wind up. We'll catch up tomorrow for the balance of the chapter. Please go back and